Hello and welcome back to the Bankers Masterclass series on the future of digital financial infrastructure in association with Banking Circle. I'm James King, the Bankers Europe editor, and I'm joined by Anders Lacour, the chief executive of Banking Circle. And in this chapter, we're going to consider the new competitive landscape facing incumbent banks. Anders, banks are under a lot of pressure today in light of the deteriorating economic conditions across much of the world. In your opinion, how well positioned are they to endure these challenges, and how do they compare to fintechs and payment services providers?
I think obviously there is a lot of pressure on the industry, like deregulation over the last 10, 15 years with PSD2 in Europe and an equivalent in the US have put pressure on the competitive landscape, while then increased regulation on the other side put pressure on the incumbent banks. That being said, there are still many aspects of the traditional banking industry that I think will benefit banks over a long time. First of all, there's balance sheet. And during any kind of economic crisis, balance sheet is important. In addition to that, you've got reputation. And when I said reputation, it's the fact that many banks have been here for 20 years, 50 years, 100 years. And that's always good with that kind of historic reliability during a crisis. We can also see that in our research, where you say that only 5% of the retail banks said they were concerned about a recession or future crisis, while 31% of the fintechs actually had that view. So I think all in all, I think they are in a strong position to face a recession. Obviously, it depends on how deep that recession is, but all in all, I think they're well positioned, and that's also what we can see in our research.
And Anders, from a competition perspective, has the process of virtualization effectively leveled the playing field between incumbent institutions and new entrants for good?
Again, I think the playing field has been leveled through the crisis, but again, the trend was actually starting probably 2, 3, 4 years ago. I think if you look at in the part of the value chain where we belong with the pipes and plumbing of financial infrastructure, more and more incumbent banks have realized that outside of their domestic core, it probably doesn't make sense to own the pipes and plumbing themselves. And you can see that same trend in other aspects of people's business, where everyone try to do what they're best at. Why not spending too much time on things outside the core? And that is a trend we had seen before, and again a trend that we think will just be accelerated post-COVID.
And as we move on from and deal with the fallout from the current crisis, do you think digitally native firms are at an advantage moving forward?
I think yes, it is. And I think, again, as we've spoken about previously, if you can succeed in developing a digital relationship at scale with your clients, you're in a very, very good position. That being said, I think it's important to emphasize that digital is not the service. You could say it's part of the delivery, but it's not the service itself. And when you look at that, we look at digitization as a journey, but not the destination. Because you have to provide some, say, content underneath this, and this content has to be provided the digital way or as part of the digital journey.
And finally, Anders, in the previous chapter, we touched on the growing collaboration between incumbent banks and other players in the ecosystem. And I'm sort of keen to understand to what extent these higher levels of collaboration are ultimately transforming or changing the competitive landscape today.
Like the competitive landscape, especially in the aftermath of quite a huge deregulation, as we've seen in Europe with the implementation of the Payment Service Directive, is always extremely interesting. Because I think technology has increased the ability to reach a lot of clients and grow extremely quickly. And with that in mind, I think the old, what you could call equilibrium in the market, where you said this is the market. Sometimes there is a fallout and then there'll be a new equilibrium. That equilibrium, it's a question of whether we will see a new equilibrium for a long time or whether we will see it again. So a lot of players are coming in, they take different positions in the market. Different market requires different services. And right now we're at a stage where everyone is trying to find the right space. The digital side of the financial market is growing extremely fast. So it'll be quite interesting to see whether we in 5 or 6 years have something we could call a new equilibrium, or whether that steady state is just disappeared and we will always see new movements and new products, new services, new incumbents scaling very fast and then disappearing again. It'll be interesting to see. I think we will see some kind of a new equilibrium, but there will just be shorter duration than what we've seen historically.
Okay, well, thank you, Anders. And in the final chapter, we will discuss the strategic value of good financial infrastructure.